Oh, hello guys, and welcome back. If you are new here, don't forget to subscribe, like, so that you'll help us grow, and also allow the YouTube algorithm to recommend these helpful videos to other people who need them. Okay. So, how much I do, we are going to look at the analysis of the reason why I bought gold. So you can see the trade running over here. There's not some kind of I don't know me trying to lie to you. I wouldn't do that for any reason. So actually, this buy I did the analysis and I uploaded a video. I think, yeah, I uploaded a video. It wasn't basically me trying to analyze or have an outlook for gold. I was just trying to what? I was just trying to teach something or give you some examples of what I thought so far. Okay. And I was using gold as a case study. And the price action decided to play out according to how, I was looking that it is going to play out. So it did actually play out that way, and we took opportunity. We took the opportunity, right, to buy gold. Now, what is going to happen or what has happened so far is that, as you can see, we made this higher high and we made this low, right? That is lower high. So basically, expectational order flow is telling us that you should expect what? You expect another what? Higher high. So that is basically why gold is what? Gold is trending in the what? In the within this high and this what? Within this high and this low, right? So we are expecting that gold will move up here and come and take this high that is sitting right here. Anything can happen. The price action can just get here and what and drop. But whatever happens, the market structure is going to tell us. So we are not going to worry about other fundamental factors like geopolitics that nobody knows how they work and stuff. Okay, so just focus on the market structure. So what's happened is that we saw that we broke above this high. Can you see that? We broke above this highs that is sitting right here, and we made this higher high. Okay, so when the market came down over here, it was just a correction that the market was trying to what? Market was trying to make. Okay, let me increase the font size so that okay. It was just a correction that the market was trying to make. But when the market came here, you see, it couldn't break below this low very well. So just a wick that got below this low, right? Just a wick. It wasn't a body break, an actual body break that can be considered as what? That can be considered as a high probability break to the downside. Just a wick. Okay. Some people can use wicks as breaks, others can use wicks as liquidity grab. I use wicks as liquidity grab. Okay, so I consider this one to be liquidity grab, and therefore the market is going to what move up like this. If it is not a liquidity grab, then when you get over here, the market will show rejections and what try to come lower, and you're going to capitalize on that. Okay, but for the meantime, we are going to see it as liquidity grab. And any signs that the market wants to be bullish over here, we are going to take the opportunity and what buy. Right. So that was what I said in the previous video. And yeah. So after here, we just have to move on to the 4 hour time frame to see how the market structure is faring over there. Like I always say, you don't have to go to the 5 minute, the 3 minutes, just around here from the daily 4 hour. From here, you move on to the 3 minutes, 5 minutes. No, you don't do that because you get confused. You need to nest the time frame to know what the higher time frames are doing. You only go to the 5 minutes and the 3 minutes, 1 minute, 2 minutes when you're looking for an entry, when you want to enter. Okay. So you move on to the 4 hour time frame. We move on to the 4 hour time frame. And the 4 hour time frame over here, we saw some market structure over here that you can what you can take advantage of, right? You can take advantage of this market structure, but I couldn't actually see this clearly. Okay, so I had to what? I had to move down time frames. That is the 2 hour time frame, what to see how the market structure is what is doing over there. Okay, I think trading view. If I try to add a 2 minute time frame, they will ask me to go premium on this kind of stuff. So we will try that for MetaTrader 5, but I think this is clear. Um, let's look at that for MetaTrader 5. Okay, 25. Yeah, yeah. So you can see at this time you can see the highs and the lows very well on the what on the 2 minutes time frame. Okay, so this was the low that was made on the day. This was actually the low that was made on the day. The wick that I said couldn't break this low that is sitting right here. You can see that it's just a wick trying to grab liquidity below this low or tapping into this what other block over here. I don't use other blocks, so I'm not going to talk about that. Let me remove the period separators for the chart to be clear. Okay, so now we have a very clean chart over here. So we made this low then we made this high. Always I tell you that the market structure, you just have to follow the highs and the lows, right? We just have to follow the highs and the lows. That is extremely, extremely important. Just follow the highs and the what and the lows. Okay. So you can see that you make this low over here and we made this high. Okay, so a low, a high. We don't have anything to say after this low and this high has been made. Why? Because we are in a no trade zone. There's nothing. No highs and lows have been broken, so we cannot do anything. We only know the direction of the market when the market is trying to break or is breaking highs and lows. That is when you can what we can actually determine the direction of the market or when the market is what rejecting. That is very, very important. Okay, so we made this high, we made this low, then we tried to break above this high over here, but we couldn't. This high over here, we tried to break above it, but we couldn't. We're just what working above it. Okay, then we came below, also working above this one. So no trade zone. This is no trade. You just have to wait. You just have to wait. Okay, then we tried, we make we made an attempt to come above this high over here, but we failed at the creation of this swing point. Okay, and that led us to come all the way down here. And it's very, very important because now at this point we have broken this low that is sitting right here, right? So what is the expectational order flow? If you have broken a low over here, we expect the market to correct and continue lower, right? So lower low, after a lower low, what do we have? Lower high, after a lower high, what do we have? Lower low, right? So the lower high came over here. So over here, we could have expected gold to what? To come down, trade down over here and create the next price leg. That is the lower low that is going to come. But did that happen? No. The market started facing rejection over here. Now, what did I say? Or what do I say most of the time? I tell you that, okay, now we are expecting a lower low. But if the market is failing to break this low over here, it means that this low might be strong. And if this one cannot break this one, it means that it is weak itself, right? It means that it is weak and can be easily what targeted, right? So based on that analogy, based on that behavior or characteristics of market structure, I position myself to what to buy gold over here because we are rejecting at this level. I was expecting a lower low for expectational market flow or what the market is supposed to do under normal circumstances if it wants to what if it wants to trend down, but that didn't happen. We created a swing point over here, right? So an opposite swing point being created tells me that we have a probability of coming up and come and take this high that is sitting right here. Okay, so based on that idea, based on that probability, what I had to do was move on to the lower time frame to see if the market strategy is actually what pointing down, pointing up. Have you seen? I am not on the 1 minute time frame trying to do this analysis. I did the analysis on the higher time frame, and I'm not going to the what to the 1 minute time, sorry, the 5 minute time frame, the 10 minutes on the other lower time frame to be able to what determine the direction of the market over here. Okay, so what did I do? I went down to the let's start from the 30 minutes time frame. The 30-minute time frame can be a higher time frame for some people. Now, when you're going down time frame, you want to go lower till you see a very clear market structure at where you want to take the entry. You don't have to have a fixed time frame that from the 1 hour I'm going to the 30 minute. That doesn't make sense. Go where the market structure is clear. So even if it is the 1 minute that the market structure is clear, just go there. Don't say that I don't trade the 1 minute. Just go there and analyze the market structure. So I can see the market structure clearly within this swing that is sitting right here. So I have to what? I have to move lower. Right? So 5 minutes. You can see that 5 minutes. I can see the highs and the lows over here, but I can still see I can still see some noise, right? The noise being within this area, but that is okay, that is fine. If it doesn't if it is not too much, we can actually what use the time frame, or you can still use the 5 minutes time frame, the 10 minutes rather. Yeah, the 10 minutes. Yeah, you can still use the 10 minutes time frame because you can see the market structure, the highs and the lows clearly over here. But I was looking at the 5 minutes when I took this trade. Okay, now on the 5 minutes, I can see that okay, after we created a swing point on a what on the 2 hour time frame, now we have a probability of going up and come and target these highs that is sitting right here. Okay, so what did I do? I waited for the market to break above a structure. So it broke above this structure, as you can see. It broke above this structure. It broke above this structure. It broke above this structure. So all these areas that are sitting right here, they are trading opportunities, right? This high, this high that was broken above, um, this side that was breaking above, this side that was broken above, right? All of them, if the market comes and retests any of them and start showing signs that you want to move up, you just take that trade. You don't always have to wait for the first level that was broken to what for the market to come back to the first level that was broken. Most of the time it will, but sometimes it will not. So just use some of those levels and just bounce off of them and start going up, leaving you behind. Right? So you don't always have to wait for the what for the most recent break. Okay. So you can see that the market came down right here. All right, then it started coming up again. So that is ICC over there, the strategy that I trade. Indication that about this level we are what we are bullish. We made a correction over here and a continuation, right? So when we created this opposite swing point over here, I said that okay, now the same market structure analysis. We made this low, we made a higher high, right? What is expected after a higher high, a higher low? What can confirm a higher low? The creation of a swing point give us a higher probability that the higher low is going to be formed, all right, or there's a potential of the higher low being formed over here and the market's coming up to come and take this low. When I saw the creation of this swing point that is sitting right here, right, after this bullish candle, it's a bullish candle and this bearish candle, I just took my what? I just took my trade. My stop loss was below this swing low because if the market comes below this swing low, it means that my analysis is wrong and I will not go into the trade. I'll go and look for a very different setup, okay, and trade. And that was basically how I got into the trade. So the market went up and started to retrace on me, but I was confident in the trade that this area was going to hold. Okay, I wanted the market to just move up so that I would put my stop loss to break even, and it did give us a massive swing, and I placed my stop loss to break even. I wanted to take another entry over here because I saw this entry. Okay, I saw this entry, but I didn't actually take it because it was Friday. Okay, it was Friday, and thought we already have an entry over here, so let's just chill. Okay, there's no need to trade always. Just get a good entry and just chill and wait. So that was just the setup and the analysis behind it. So if you are wondering how if you're wondering maybe for me to go into details of how I actually do the detailed analysis, I just gave you an overview. But if you want to understand what I'm talking about, the concepts and the swing structures and those kind of stuff, then you should check out my videos in the other channel so that I can assist you. I think that is that. And yeah, it was a very nice entry. I had to wait for a lot of times this week. This is the only trade that I took. I saw a lot of setups, right? Especially in Asia and New York, but I missed them. I missed a lot of them, and some didn't have some kind of confirmation that I was looking for, so I didn't trade. And this gold trade was perfect. I just took it. So actually, basically, I'm expecting the market to move up here and come and target this overall structure over here. But that is delusional, right? So first of all, we can target these highs that are sitting right here. Then after this high, then we can wait for a retracement and also capitalize on the retracement and what target this areas that is sitting right here. Okay, so that is what you should probably expect if gold is supposed to be what to bullish. Make sure we don't have any news that the market is going to, that's dropping. But even if it does that, we will just exit the trade if I see the signs that the market wants to go bearish, and I'll just capitalize on what I have so far. All right. So that is that. Um let's look at how this goes, okay? Peace. I'll be with you.